All right, testing, testing. All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. It is 9 a.m. Eastern Standard Time. This is a Monday, December 19th, 2022. Thank you so much for joining me today and every day this week. My name is Carlos Garcia, founder and CEO of GAR Capital. Welcome aboard to the Morning Note. Let's go ahead and get started. Futures, we'll go around the horn here. Dow futures down about 6 points off their highs this morning. NASDAQ up about 0.18%. S&P 500 up about 0.06. Russell up about 0.06 as well. Pretty quiet out there. Crude oil up about 1% this morning. 75.26, 75.20, going higher, 40 a barrel. 75.40 a barrel. 216 for gasoline futures, 165, 1.65%. It is moving. 10-year treasury yields gapped up today, 3.575%. We have a couple of gaps to fill, or we have one gap to fill here around 3.61. Keep an eye on that. Dollar index still hovering around that key level here of this trend line of around 103.71. You still have that 200 MA on the hourly still acting as some kind of resistance below 105. We're going to watch that very closely. Volatility index pretty muted, up 0.84%. No real gaps to fill here. If you bring up the daily, again, we're still below this trend line here on the bottom. But again, you still have this support here around 1956. So again, if we expect a little bit of a bounce somewhat, we need the VIX to drop a little bit. Gold futures up marginally, 18.01 an ounce, 23.45 for silver futures, up about 0.5%. Euro dollar, 106.07, 136.77 for the dollar again. That's up slightly, and the pound 121.69 helped it by the dollar. 16,655, kind of choppy action. 17,016.9 or so. That's where we kind of been hanging around. 1,177 on Ethereum futures. That's down about 1.83% this morning. I did send out the newsletter this week. It just came out this morning, so you guys can read before the morning. I sent it out to our Discord last night, the breakdown. So again, I want to go ahead and show you here. You can see the newsletter that we send out. We also sent out our watch list. It was a tough week last week. We just got to bounce back. We have a video up. We have our watch list up, so the team is ready to go. I want to read the newsletter because that's pretty much everything I'm going to talk about. So let's go ahead and break it down. I'll read it to you guys. Here's this is the newsletter here. GAR Capital for the week ending in December 29, 2022. Thoughts for the week. Good news is still good news, but the Federal Reserve still runs the show. Let me go ahead and move this out of the way so I can read it. There you go, much easier. Good news is still good news, but the Federal Reserve still runs the show. Even with a better than expected CPI number, the market sold off at the S&P 500 levels not seen since earlier November. We got a 50 basis point rate hike expected by the Fed, and Chairman Powell is sticking with the hawkish tone in order to kill inflation as best as they think they can. Is Christmas canceled? No Santa. Is this a 2008 reboot? How about a 2018 reboot? It's only human nature for us to look at the past for direction in the future. When it comes to equities, the real question for investors or those looking for future direction or confirmation of a bottom, quote, do you believe the Federal Reserve? Now, do you take their word that they will see the tightening cycle through until their goal is met? 2% inflation. Remember that last year. Let's look at some scenarios and possibilities together. Here's my take. Sometimes it's hard to be a bull, right? Especially with the price swings that we've had. And again, I've been repeating this on the newsletter that it is a trader's market right now, at least really since October. But I still personally think the bottom is in. That's still me, at least for the year, minimum at 35.02 ES. Now, again, that's not saying much because right now we're trading around 38.81. I hope we can hold 380 points, S&P points until, what, about a week or 2 weeks? This is less, so let's go ahead and see. Now, that's not saying much, but a couple of things I have been watching. First, the 50 basis point rate hike. This is less than the 75 points rate hike that we've been getting lately. CPI and PPI are on the downside. I think anyone could dispute that. The issue is expectations and getting them out right. Well, if the Fed was so hawkish, is my question, regarding the macro, why not do another 75? Why go 50 with no meeting in January? We don't have a meeting in January. The next FOMC meeting, guys, is in February, the first week. The market is pricing in another 25 basis point raise. So again, the Fed could have easily done another 75, really try to kill inflation as much as they can, but they went 50 with there's no meeting in January. So pivot or less tightening, either way. I still think people are taking the Fed at their word, which has shown it hasn't worked out so well. 2018 hiking cycle. I remember that December 2018, we had that big drop, pivoted months later in 2019, back to cutting. How about Q4 2021, just last year? Fed saw no reason of sustained rate hikes as inflation is nowhere near the 2% target. Boy, how things flip. And now to Q4 2022, we are not done tightening. We are committed to full price stability. Interesting, one asset class that does not believe the Fed. It's two-year treasury yields. Again, which track closely with rate hikes or rate changes. Again, shorter time frames. You wouldn't want to lock in a bond at this interest rate unless you think rates are going to go lower. If you think rates are going to go higher, you're not buying bonds, you're selling them because you can get a better rate later. And the price of bonds move inverse of the yield. 2 years yield, treasury yields fell this week to 4.18% from the peak of 4.4% and from November peak of 4.72%. Remember, guys, it's very important. The bond market bottoms before the stock market, and the stock market bottoms before the economy. It kind of broke off here. Credibility issues aside, like the Fed is putting them, credibility issues aside, it seems like the Fed is putting themselves in a tighter and tighter box where debt levels are, again, this is the United States debt levels, are double from where we were in 2007 at the same rate levels. Is this sustainable without serious damage to the economy? Highly unlikely. A Fed-induced deep recession is definitely in the cards, especially with earnings coming up. The question is, does the Fed pull the market back from the brink is all, like we've seen in 2018 into 2019, and that quick change. And then you have 2021 to 2022. Again, quick changes from the Fed. A raise and pause. Here we go. My call is that there is a pause coming in Q1 of 2023. A raise and pause would give the market at least some stability, at least in the short term. So that's my expectation. I think basically the Fed is basically done ratcheting up rates. I think Q1 will get one more, which will probably be the February one, and then they'll probably pause there. That's just my opinion, because then they'll see that we'll have another January CPI, we'll have a February CPI as well. So why did we get the sell-off last week? The Fed's dot plot, which is not a forecast, that's their words, included a 50 basis point hike in 2023 September. $100 billion worth of stocks were dumped due to rebalancing. I went ahead and included the link there for you. The dollar, if you want to click it, I can't click it from here. The dollar also bounced off a key support on a 104 trend line. We went over that. Even winners of 2022, energy stocks, we've talked about those. They double topped on XLE. That hurts equities as well. Again, downside risk is that energy will pull back, but we needed a rotation into other assets, not liquidation. We need not flight from the market, but actually rotation out. If people sold energy stocks and bought tech, healthcare, or something else like that, that would show a little more of a bullish tone, as just say. Here's my reminder for everybody. What's your year-end targets for S&P 500 futures from early December newsletter? We closed 38.72 Friday night on the 50-day DMA. You can see it right here. We closed right there. We're still on it. Our base case is 4,100 to 4,130 by end of the year. We reject that trend line, but stay above the 200-day, 50% fib level. Bull case is 4,300, the August highs. And the bear case is 3934 to 4,000, the big 618 level right here. We just need to make that up. That's your bear case. And then 50% retrace level is right above at 4155. Keep in mind. So all bad news, huh? Don't fight the Fed. Again, short term, it's still a trader's market. I've been saying it for weeks now. The S&P 500 is right on that 50-day MA. The Santa rally seasonally starts at the back half of the month. 2018, we bottomed on a day after Christmas, then retraced all the losses of December into March. That took 3 months. So if we follow that analog, we got some time to take advantage of some additional downside. And I included a chart here. If the 50 DMA is broken, again, here you go. If the 50 DMA is broken and settle the candle below, we have 37.81, which is right here. That's that fib line. And a 78.6 retrace level. You can see it right here. Let me go ahead and expand this for you. Here we go. You can see 37.81 on the daily. Let me go and expand this on a 2-year basis, give us a little more color. And you can see here. You can see that 50-day still holding the yellow line. 37.81 is your downside target, is what you're looking for. And we also have this yellow line here right around 37.44, which was the next zone. So just giving you the heads up. With accelerated losses, we could definitely see 3,600, which is right down here, if we were following the 2018 script. With the analog of Q1 2023 will be weaker, probably break the low 35.02 if we follow that script. We also have to start the earnings seasons next month. Many things to watch. Those forecasts, EPS estimates, have rising rates killed enough demand to hurt margins. That's something to watch closely. Anyway, we reverse higher into some of my targets. That's the big question. It's all in the dollar. Really, the dollar. We need the dollar to break down. We need that dollar to reverse lower to break below 104 and get to that $100 level, 100-point level, excuse me. In terms of short-term moves, 4,000 is a key pivot for upside. So again, we want to get back into this channel here before we start anything about going bullish or not, or looking for some more upside. Because if anything, you're probably selling into this. Anything you're looking to position yourself to probably sell these rips. So again, what you're probably looking for is possibly getting up to this 100-day moving average. And again, anything that's, unless we're below the 39.88 level, I'm looking to actually short these rips and probably get to that 37.81 level, which would get us back to the same CPI boost that we had in November. Remember, it's reversals on reversals in terms of December. Not getting that momentum the way November had, obviously. Yields are coming down, as spoken about earlier, but equities seem to be ignoring that. In terms of the VIX, at end of the day, red, even with the OPEX sell-off. So again, here is the chart that I want to show you guys on the newsletter. And you could see here that the dollar, here's a 10-year yields. Again, we still have that head and shoulders. We're considering this to continue to go down. And then we have the dollar. Here's your dollar. Again, that trend line here. How about that XLE double top? 1, 2. We talked about that a couple of weeks ago. Here's your 2018 S&P 500 daily. You could see very similar, kind of a triple top, triple double bottom. Then we broke down and tested that low right during Christmas holiday, pretty much the same week. So again, if we're following that 2018 analog, we're probably going to take a look around 37.81 is where we're probably going to get to, if not 37.50. So again, we could get that continuation. Again, we just have to wait and see. But again, after that low, we did bid and make up the gains until March. So those are your possible scenarios here. And again, guys, if you do like this breakdown, you could follow it on our Discord, or you can sign up for our newsletter, which is free at garcapitalfx.com or gar.capital. That's just the website, gar.capital. How interesting. All right, so that's where we are this morning. Kind of broke it down so far, pretty much everything I was going to say. We're getting a little bit of a move now on S&P 500 futures as it is red. We hit 38.95 in the morning, but right now we're just waiting and seeing. Tesla is up this morning, as Elon Musk did say. He put a poll out on Twitter stating that should he step down as the CEO of Twitter, and the vote was yes. So I don't know if he's going to actually do it, but that's what Tesla's boosting on for the most part. In terms of news, let's see. Got some stuff here. Tesla came up, we talked about. But for the most part, the big news this weekend was a great sports weekend. And it was a tough weekend, at least for trading yesterday, unless you were short, and I wasn't. So I did take a hit. So it's time to make it back. 2018, I had the same issue where I just got mowed down by the Fed. I think I went like 0 of 7 for that week. And then the next week, I went 11 and 11 in trading. So there's always opportunities for the next week. My Cowboys lost on Sunday to the freaking Jaguars, but we did clinch a playoff spot. So that's always nice. Congratulations to Argentina. What an amazing World Cup. I was tweeting about it live during the game. I had to. I mean, soccer is just a beautiful sport. It's World Cup. Everyone's watching. It was such a fun game to watch. Even last night's Giants and Commanders game was great. Just all great stuff. And then Saturday we have more football. Oh, can't wait. But a lot of great things to come. So again, that 50-day moving average, let's see if we break down below around 38.57. If we do break that below, then I definitely want to start getting to puts. The only issues that put prices could be elevated, obviously, as we continue to go down. So again, just be flexible. It's a short week. We know that. Christmas is on Sunday. I don't expect much to happen on Friday. But again, anything can change. In 2018, it didn't matter. We continued to go down even with good volume. So keep that in the back of your head, guys. Definitely could get lower, but we have to see if we hold that 50-day moving average. Keep an eye on the dollar. That's my big thing here. If we get to 105, we're definitely getting to 37.81. So again, that's the key level we're watching. All right, guys, we'll go and leave it there. I figured that everyone's pretty much getting ready for the holidays. I don't expect tons of people to be on the YouTube, but I will do it anyways. Have a great rest of your morning. I will catch you guys tomorrow for the morning note. Let's make it a better week than last week. Let's move forward and kill it. Have a great rest of your day, guys. Cheers.